In this video, I'm going to apply the accounting equation. I have taken unearned earnings as a case example here. Unearned earnings can take place in stores or companies where they issue gift cards. Gift cards, when they are sold to customers, the earnings are still unearned until such time when the gift cards are redeemed, where the earnings are earned. In this example, assume that the local hardware store as your company. Hardware store sells transferable gift card of $200 to Philip for cash. Philip gave the gift card to Mandy as a birthday gift in the same month. In the same month, Mandy shopped at that hardware store and spent a total of $300 for items noted below and used the gift card and paid the remaining balance with cash. So we got the items that were sold to Mandy: outdoor storage chest, wheel stop Australian compliance, garden greenhouse, lockable outdoor storage cabinet. We are required to show the entries using the expanded accounting equation. Before I get to the expanded accounting equation, I will use the basic accounting equation. In that equation, assets equal liabilities plus owner's equity. Assets are items owned and controlled, and items where cash to be received by the company or the enterprise, and liabilities are items for which the company has to pay, and owner's equity is the excess or the shortfall between assets over liabilities. So if there are more assets compared to liabilities, then there's a surplus in owner's equity, and if there are less assets compared to liabilities, then there's a shortfall in owner's equity. So let's apply the facts into this equation. So there are two sets of transactions. The first transaction is selling the gift card. So when the gift card was sold to Philip, the store received cash of $200, and there's unearned earnings, which is a liability of $200. Then Mandy came to the store after Philip has passed on the gift card to Mandy. Mandy then redeemed the gift card of $200, and the store sold the items, storage chest, the wheel stop Australian compliance, garden greenhouse, a lockable outdoor storage cabinet. And when you add up all the items sold, that adds up to $300, and there's a remaining amount of $100 which was settled, and the store received cash. So when we look at each transaction selling gift card, we can see that the left side equals the right side, $200 and $200. And then when we look at the second transaction, when we add up the right side, that equals to plus 100, and then on the left side there is a plus 100, so 100 and 100. Now that both sets of transactions, the left side and right side equal, when we total it up, it becomes 300. It's 300 on the left side and 300 on the right side. So when items were sold, owner's equity increases because the earnings belong to the owners. So the enterprise's asset position increases. Therefore, owner's equity is increased when the items were sold. We'll now look at the expanded accounting equation. In that equation, assets equal liabilities, and we expand the owner's equity portion with the initial capital contribution, then any opening retained earnings at the beginning, and then the revenue earned during the period, less expenses incurred during the period, and any drawings taken out by the owner during the period, and any dividends paid out to the owner during the period. So let's apply to the expanded accounting equation. The first transaction is selling gift card. So debit asset and credit liabilities. So liabilities increase and assets increase. And the redeeming gift cards is the second transaction, and then selling items to Mendy. The redeeming gift card decreases liability, and then the revenue increases with the sale of the 4 items, and then the settlement of the remaining amount was cash, and the cash balance increases. Because both equations, transactions balance on the left side and the right side, when we add up, the left side equals the right side of $300. We can use the notation of debit and credit. On the left side, anything that increases, we call it the debit increases, and on the right side, anything that increases, we call it the credit increases, right side. But we don't have example on the left side where it decreases. If it does, like assets, then we use if there's a minus on the left side, we use the credit side. So that brings us to the end of the video. Thanks for watching. I am Professor Indra Besekra.